Hey everybody. If you're like I am, one of my big worries has always been that I am going to be audited at some point. It hasn't happened yet, and it hasn't happened to anybody that I know of currently. The only person I know that it's happened to was a relative of mine about 15 years ago, and that's because his finances were a mess. He really didn't keep super great records, um, and by that I mean he wrote down everything he spent, but he didn't keep receipts. So if you don't keep the receipts with the dates, then you know. So there's three different types of categories for audits that the IRS will do. The first one is going to be the correspondence audit. This is where most people will fall into the category, and the IRS will handle most things by mail. It's most efficient for them. It requires the least amount of man hours, and that's just kind of what they do. The second type is going to be the office visit, the office audit, where they will ask you to come into their office. Typically, they'll have you bring in some of your records and things, your receipts or whatnot, and they'll spend at least one afternoon. They may ask you to come back a few times to get through everything, to sort through your records. And then the third one is the field audit, and that's the big uh-oh, where they come out to your work, your home, wherever you're at, and they will look through all of your stuff. They'll check your assets, they'll check your paperwork, they'll go through all of your records. And that one, for that, is the likelihood of that is pretty low, but it does happen. Common issues that the IRS looks for, I know they do have a certain number of random checks that they do every year, but there are also algorithms. And if somebody says that there isn't, they are lying to you. There are algorithms that the IRS uses to do base checks. Some of the things that they look for are underreported income. If somebody else's records they say that they paid you, but you're not reporting that you got paid from them, the IRS will say, "Hey, these people say they pay you, but you're not saying that you got that income. What's going on?" So they'll look for that. They'll look for claim deductions that you claimed that you're not entitled to. And this one is kind of where the hobby rule comes into, because if they determine that your business isn't a business, you are liable for back taxes and all those fees and extra stuff. So make sure that you're really paying attention to that. And if you do show a loss, that it's not multiple years in a row. If it is multiple years in a row, you have valid reasons for it. So, the wrong deduction paperwork done, if something isn't signed or they're missing something, they look for that. That's a red flag for them. And then, again, taking business deductions when the IRS determines that you're a hobbyist. So you're liable for that. Some tips to kind of reduce risk and avoid that is to, like I said, keep all of your records of incoming and outgoing revenue. Document everything. Make sure everything at least has a date, a price, a date, and a name. Either your name, hopefully it has your name on it or next to it, and whoever you are making the deal with, either selling to or buying from. Have both names. Don't be afraid to attach explanations to your tax records, especially for extreme or special circumstances like natural disasters, COVID, and all that kind of stuff. And limit the number of miscellaneous expenses that you try to file deductions for. Make sure everything has a category, because the more miscellaneous things that you have, the more that they think you're trying to kind of get one over on them by just grouping everything together. So to the best of your ability, make sure when you file, you put all of your deductions and everything into as many categories as possible. Well, not as many, but put as many things into as many categories as you can. Don't just leave it out there as a random expense, because they're going to check on that. And then a few things: don't overpay with your taxes. Be smart, but be truthful too. You don't want to overpay for your taxes, and that's typically what happens when you get a really big refund at the end. is that you've overpaid, especially if you're taking an income for yourself from your business. Uh, and so that's what you get from, that's where your deductions and everything come from. And like I said, be smart, because the IRS is not going to say, hey, you overpaid us this year, or hey, you missed this deduction that you qualify for. They're going to expect you to know that. And if you don't file for it, they're going to think that you just don't want it. So be smart, but be truthful.